Hello, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, a local mortgage brokerage in Chelsea, Michigan, and this is an interest rate update for July 14, 2022. I'm going to be doing these updates about weekly or every other week, so if you're in the market for a home purchase and want to keep an eye on what interest rates are doing, please subscribe to the channel so you don't miss those updates. Also, all of my contact information will be in the video description if you would like to reach out. So without further ado, interest rates this week are up a little bit. So this is Freddie Mac's primary mortgage market survey that comes out every Thursday. That gives a good idea of what conventional mortgage loans, what they're trending. So these numbers come from multiple different lenders, provide the information to Freddie Mac, and they come up with a good average. They do typically show points associated with the loan. So these are interest rates that are a bit lower than what you'd get if you were not paying points. And I'll show you a interest rate without points today at Homes Mortgage Lending. But just to give you a trend, so this is last week, interest rates were dipping, and then this week they're up a bit. The main reason for that increase is because inflation numbers came out higher this week than what was expected, and the Fed is likely to react to that by raising their interest-free rate to the banks at the end of July by 1%, when it was previously estimated that they would raise it 0.75%. So that higher interest rate increase is already being priced into the market. So the good news is that's not going to raise interest rates when they actually raise the rates, unless they raise it more than 1%. But hopefully interest rates come down a bit from here, but that Fed interest rate hike is already priced into the market. So I did a scenario based on current rates at Homes Mortgage Lending. Give me one moment. So based on a $375,000 purchase price with 20% down at a 740 or higher credit score on a single-family primary residence on a 30-day lock period, currently the interest rate with my company would be 5.67% and an APR of 5.799%. So again, I'm a brokerage, so I looked at multiple lenders investors that I send loans to, and this was the best pricing for the day, but they're all in the same ballpark. But I want to show you what that actually looks like. So here's the actual scenario. So a $375,000 purchase price, the down payment with 20% down is $75,000, so a loan amount of $300,000. And then there's the interest rate of 5.67%, APR of 5.799. So here's all of the estimated costs, money to set up an escrow account. And then we're estimating the total payment with an escrow of $2,585.50. So estimated homeowners insurance per month and estimated property taxes per month. And I'll talk about both of those here shortly. But first, I want to talk about the actual principal and interest payment of $1,735.50 and how that kind of affects you if you're not looking to buy a house for $375,000 with 20% down. Want to show you some quick math on how you can figure out about what your payment would be. So sorry about that. $1,735.50 is on a $300,000 loan amount. So if we divide that by 3, per 100,000, that's going to be $578.50 principal and interest, or per 10,000, $57.85. So if you were buying a house for $200,000, be $11.57 principal and interest. So you want to also consider that if you're buying a more expensive house, you're going to pay higher property taxes. So it wouldn't be just $57.85 for every $10,000 that you borrow above what you're currently looking at. So I want to show you how I got the property tax numbers. The state of Michigan has a cool site, and I'll put this in the video description, where you can estimate property taxes. This was based on a home in Ann Arbor, Michigan. But what I like to do is we need to estimate the state equalized value. It's usually about 48% of the purchase price or the appraised value. Excuse me. So purchase price is $375,000 times 0.48 is $180,000. So we'll plug that in as the estimation for the state equalized value. This is in Washtenaw County, in Ann Arbor, in Ann Arbor schools. So that would be $91.75 is what the estimated property taxes would be. Now, one thing to note is that property taxes likely are lower than that right now, but that's what they're going to go to after the home is sold. If you want to learn more about that, I've got a video about what happens when a home is sold and how property taxes increase. We're going to take that $91.75 and divide it by 12, and that's the monthly estimated property taxes. I just rounded up to $765 right there. And then homeowners insurance with this credit score in Ann Arbor, $85 a month is $1,020 per year. That's probably high side. It's probably somewhere between 800 and 1,000, but just to give a good estimate for the full monthly payment. So if you are in the market for purchasing a home and want to have your numbers ran for a specific home that you're looking at, what I always do with my clients and what your lender should be doing, in my opinion, is having you send them property addresses and what you're looking at offering on any individual home. And we can actually pull the current property taxes, run an estimate for the future property taxes, and I always put a few worksheets together that looks very similar to this with much more accurate numbers based on that specific home. So again, my contact information is in the video description. If you have any questions, feel free to reach out to me. Feel free to leave a comment. I hope this was helpful. And this is my first iteration of this type of video, so if you do have any suggestions, please don't hesitate to leave comments on what you'd like to see in the future, and I will try to incorporate that in the future. Thank you so much.